1 month invested, a global tariff scare, and over £250 in profit. Hi guys, and welcome back to the channel. Now in today's video, this is going to be our first month update of our new investment series. This series is all about tracking the performance of my stocks and shares ISA, which I started last month. If you caught one of my last videos back in April, then you'll know that I disclosed my full investing blueprint for the next 2 years. That video covered which strategy I'll be using and which funds I'll be using to build this portfolio. And now, just 1 month into the portfolio, it's time to see how things are doing. For anyone new here, this series is all about building wealth from the ground up. There's no shortcuts and no hype here. It's all about long-term investing and showing step by step how you can build wealth. Hopefully this will give some motivation to start investing yourself. For anyone new here, the platform I've used to build this new portfolio is InvestEngine. I've then compiled a short list of a few funds which gives me global diversification. These funds grouped together are going to be the backbone of this investing series. On each episode going forward, I'll do a bit of a summary on the market and also go through the analytics and the performance of our particular portfolio. So let's talk about the biggest piece of news over the last month or so, and that's the tariff war. On April the 2nd, President Trump launched what was dubbed as Liberation Day, announcing sweeping new tariffs on all imports. And markets tumbled immediately. But just 1 week later, on April the 9th, the White House did a complete U-turn, pausing the tariff rollout following the backlash from US businesses and global partners. That announcement triggered a market rebound. One of the clearest examples of this rebound was the S&P 500. After plunging into correction territory early in the month, it bounced back quite fast. Right now, the S&P 500 is sitting just below its all-time high. This is a huge shift in sentiment in just a few weeks. For any investors that stayed calm, and even those who bought in the dip, will have profited from this short-term rebound. We'll pick up on this again later in the video. Now turning to Europe, the market's been regaining throughout May. On the 20th of May, the Stock 600 index, which tracks the performance of the top European countries, climbed 0.7%, closing at a near 9-week high. This rally was predominantly led by utilities and the telecom sectors, which saw strong gains off the back of easing global tensions. Shares of offshore wind power developers also gained this week. This was mainly down to Donald Trump's administration lifting a stop work order on major offshore wind facility plans off the coast of New York. Over in the UK, markets have been on a steady climb, with the FTSE 100 now up over 6% year to date, showing renewed investor confidence. A major catalyst this month was the announcement of the new UK-EU trade agreement on May the 19th, a long-anticipated deal aimed at resetting ties post-Brexit. The agreement includes simplified border checks, better market access for UK businesses, and a controversial 12-year extension allowing EU fishing in UK waters. A couple of standout performers this month was both Vodafone and Greggs. Vodafone being up over 7% after forecasting a return to profit growth, and Greggs which gained 6.5% on the back of strong sales with the help of its new product launch consisting of iced tea and mac and cheese, which went viral across social media. That's a quick snapshot of the market, and now it's time to look into the portfolio and see how it's been performing. Okay, so diving straight into the InvestEngine platform here, we can see within my ISA, I've got this Elevate All World fund. This is the fund I spoke about earlier in the video, and it's also the portfolio which I went into detail in my previous video. So if I click into here, this is where all of the funds are going to go for the next 2 years. So straight off the bat, we can see our total portfolio balance of basically £3,250, which is great. Some of the key details here, which I think are quite important: the 0.06% total expense ratio, so that's basically the cost of the funds combined. And then we've also got the yield, so this is the dividend payment per year. So I can expect on these investments a dividend yield of 1.62%, which will get paid out, I believe, quarterly throughout the year. You can also see my savings plan a month here. So for anyone new here, I put in £1,000 a month on the first of every month, whether the market's high or low. That's known as dollar cost averaging. And the idea to top up my ISA to the full £20,000 allowance is then, with the remaining £8,000, I plan to put that in sporadically as and when cash, my cash funds allow it, and also for opportunities in the market when we see a bit of a dip like we've seen last month. So You can see here the red, not red dots, well they are red when you hover over them, the red dots are when I bought. So in April I actually invested £2,000, which are coming out of my £8,000 sporadic cash fund pot, if you like. And the first £1,000, so the monthly contributions, actually came out at the start of May. So £2,000 of my sporadic cash portion, and then £1,000 of my dollar cost averaging approach. Again, this would make more sense if you watch my previous video on my investment strategy, but nevertheless, we can see here, so as of the 7th of May, it took a few days for that £1,000 to go in, but yeah, we can see already we've seen some great growth. Now, the reason I put that £2,000 in April, I saw the markets were down, over 10%, and I saw that as a buying opportunity to make some short-term gains, which, as you can probably see already, at £251 profit already in just the space of around sort of 5 weeks' time, which is great. The other great thing about this portfolio here is that we can scroll down here, and this is essentially what this portfolio is built up of. Closely mirrored that of Vanguard's VWRL, FTSE Global All Cap Fund. So that's in there. So I've tried to replicate that, but the key reason of doing this is that there are lower fees, and this also gives me a bit of freedom to invest in different regions, should I wish. So we can see straight away my S&P 500 ETF at the top there that makes around 67% of this portfolio is up around 10%, so £158 of those gains has come from that. The second one is basically my European ETF, excluding the UK, so that makes up around 11% of this fund, which again, that's up almost 15%, so that's a great start to this portfolio. We've then got my emerging markets ETF here, which makes up around 9% of this fund, and that's up 11% as well. My Japan ETF, the Amundi Prime Japan ETF, which is up just over 10% as well. And my FTSE 100, so this covers companies in the UK, so that's up almost 13%. So the UK has rebounded really well, so those are great gains really. And then I've also got an Asia Pacific excluding Japan to kind of complete this global diversification at just 3% of this fund, and that too is up almost 13%. So yeah, really happy with that performance across the board. One thing we can do here is look at the analytics. So if I click into here and click analytics, this shows by region how this money is split up. So again, North America still makes up a large portion of this. It's the largest economy in the world, so that's why it takes up such a large portion. It's worth noting that these sort of splits and the balance of the weightings, I can change at any time, which again gives me a little bit more control over using a sort of a one-size-fits-all global ETF like VWRL. That's another reason why I went with this approach. So we can see just over £2,000 in North America, nearly £360 in Europe, Japan £190, £145 in Asia excluding Japan, £143 in emerging markets, £135 in the UK, and then bits of around the world then make up the remaining £132. You can also see here that I have nothing in bonds or alternatives like commodities. Everything is in equities or stocks, basically companies. We can look at sector as well. So I guess the industrial and technology sectors make up the bulk of this portfolio, but again, the others, sort of mining, energy, make up smaller percentages. But again, this is in line with a typical global ETF such as VWRL. And what I really like about InvestEngine, because I'm investing in thousands of companies, you can see here, over 3,000 companies with this diversified approach, you can actually have a look and see by company how much of your money has been spread into those companies. And yeah, you can see here from a quick snapshot, it's quite tech heavy at the top, biggest holdings being Microsoft, Nvidia, Apple and Amazon, and then scrolling down to see some other familiar names as well. So again, There's not too much value to be seen from this, but it's nice if you ever fancy a look at the stock market and think, okay, how much money do I have invested in this company? You can have a quick look on here. And as long as you're quite globally diversified, most of the big companies are going to be within here, and you can search by holding as well. Asset class as well. Again, as I mentioned before, you can see that everything's within equities. You know, if I wanted to invest in a bonds ETF or even a commodities such as the iShares physical gold ETF, that would obviously affect this split there. So coming back to the performance, you know, really happy so far. You know, we're around sort of 5-6 weeks into this portfolio, and to already see a 11% increase is great. I think some of the things that I'm, you know, anticipating within the performance here is when this break from the tariff war is over, what will happen, whether stocks will tumble again or whether it'll be a positive outcome and stocks will rally, but obviously time will tell with that. So that wraps up this first month's portfolio update. I'm really excited to see where this goes in the future. We're already off to a flying start with over £250 in profit. I'll continue doing these monthly updates because I think they're quite useful for people who are looking to invest and want to see in real terms what it's like month by month. If you'd like to follow along or even copy this exact portfolio, I'll leave the link to this in the description. Feel free to have a look at the weightings or even use it as a starting base for your own investing journey. If you're interested in watching this journey unfold or simply want some extra motivation for your own consistent investing plan, then consider subscribing for any future updates. As always, if you've got any questions or any ideas you'd like to share, then please make sure you do down in the comments section. Thanks for watching, and I'll see you in the next one.